The first interest rate hike should come in May next year at the earliest. This as inflation shows that economic growth continues at a sluggish trend. And Group Executive, or rather Group Economist Rian Roux told journalists in Johannesburg that the Reserve Bank is unlikely to raise interest rates following the expected tax increases to be announced in the February budget.
The economy has been through serious challenges this year, from growing at a snail's pace to inflation topping the Reserve Bank's target range. Electricity supply problems, labor instability and rating agencies' downgrades all made matters worse. It's expected the economy will rebound in the latter part of this year and next year. With lower oil prices and a stable rand, it's expected inflation could continue to slow down. The improvement in the economy next year will, however, not be nearly enough to create enough jobs.
The Reserve Bank estimates that the growth potential of the economy at the moment is only about 2.5. That will not be enough to create jobs on a meaningful scale. There will be some job creation, but not a lot. So we need to grow the economy faster. I think that's very important. And therefore, to achieve fast economic growth, we need to have a speedier implementation of the NDP, which government's been talking about. So we need to see that. Obviously, it will also help if the world economy grows a little bit faster, because South Africa is a trading nation. We cannot grow fast if the world continues to struggle. So that'll be important for us. And I think also we need to have better labor relations in South Africa.
There are still expectations that South Africa will be downgraded further.
I think a downgrade from Fitch is very possible. It will not be a surprise either. I think the bigger risk is, what happens further down the line. So if we don't get the budget deficit under control, if we don't get the current account deficit under control, if the economy doesn't grow faster, then you run a risk of particularly S&P, which now has us on the lowest investment grade, that they could downgrade us to below investment grade. If that was to happen, I don't think that's imminent. It won't happen soon. They will first change your outlook, which is now stable. They will change that to negative. So it'll be quite, if it's going to happen, it's quite some time down the road. But the risk is that we could go there. So, the best strategy for South Africa is to not go there. Don't risk getting a downgrade to junk.
Roux says the improved economic prospects depend on more stable labor relations and how electricity constraints are addressed. Government should also speed up implementation of the National Development Plan. Gloria Sefako, SABC News, Johannesburg.